GST Business Model, Masters of Commerce, 4th semester, Mangalore University, Session 6. GST Procedure, the salient features of GST and the advantages of GST. Learning objective, to know the features of GST. Session objective, knowledge about the features of GST. The salient features of GST are as under. GST is applicable on supply of goods or services as against the present concept on the manufacture of goods or on sale of goods or on the provision of services. GST is based on the principle of destination based consumption taxation as against the present principle of origin based taxation. It is a dual GST with the center and the state simultaneously levying tax on a common base. GST is to be levied by the center would be called CGST or the central GST, and that to be levied by the states would be called SGST or the state GST. An IGST or the integrated goods and services tax would be levied on interstate supply including the stock transfers of goods or services. This shall be levied and collected by the Government of India, and such tax shall be apportioned between the Union and the states in the manner as may be provided by the Parliament by law on the recommendation of the GST Council. Import of goods or services would be treated as interstate supplies and would be subject to IGST in addition to the applicable custom duties. CGST, SGST, and IGST would be levied at rates to be mutually agreed upon by the center and the states. The rate would be notified on the recommendation of the GST Council. The GST Council has decided that GST would be levied at four rates: 5%, 12%, 18%, and 28%. The schedule or the list of items that would fall under each of these slabs has been worked out. In addition to these rates, a cess would be imposed on demerit goods to raise resources for providing compensation to states, as states may lose revenue owing to the implementation of GST. GST would apply on all goods and services except alcohol for human consumption. GST on five specified petroleum products, namely crude oil, petrol, diesel, ATF, and natural gas, would be applicable from a date to be recommended by the GST Council. Tobacco and tobacco products would be subject to GST. In addition, the center would have the power to levy central excise duty on these products. The list of exempted goods and services would be kept to a minimum, and it would be harmonized for the center and the states as well as across the states as far as possible. Exports would be zero rated supplies. Thus, goods or services that are exported would not suffer input taxes or taxes on finished products. Credit on CST paid on inputs may be used only for paying the CGST on the output, and the credit of SGST paid on inputs may be used only for paying SGST. Input tax credit of CGST cannot be used for the payment of SGST and vice versa. In other words, the two streams of input tax credit cannot be cross utilized except in specified circumstances of the interstate supplies for payment of IGST. The credit would be permitted to be utilized in the following manner. First, ITC of CGST allowed for payment of CGST and IGST in that order. Second, input tax credit of SGST allowed for payment of SGST and IGST in that order. Third, ITC of IGST allowed for the payment of IGST, CGST, and SGST in that order. Accounts would be settled periodically between the center and the states to ensure that the credit of SGST used for the payment of IGST is transferred by the exporting state to the center. Similarly, IGST used for payment of SGST would be transferred by the center to the importing state. Further, the SGST portion of IGST collected on business to consumer, that is B2C supplies, would also be transferred by the center to the destination state. The transfer of funds would be carried out on the basis of information contained in the returns filed by the taxpayers. The laws, regulations, and procedures for levy and collection of CGST and SGST would be harmonized to the extent possible. The whole GST system will be backed by a robust IT system. In this regard, Goods and Services Tax Network has been set up by the government. It will provide front end services and will also develop back end IT models for the states who opted for the same. Advantages of GST. GST is a win win situation for the entire country. It brings benefits to all the stakeholders of industry, government, and the consumer. It will lower the cost of goods and services, give a boost to the economy, and make the products and services globally competitive. The major advantages of GST are discussed here under. First, benefits to the economy. Under that, creation of common national market. GST aims to make India a common market with common tax rates and procedures and remove the economic barriers, thus paving the way for the integrated economy at the national level. Second, boost to Make in India initiative. GST gives a major boost to the Make in India initiative of the Government of India by making goods and services produced in India competitive in the national as well as international market. This will create India as a manufacturing hub. Third, enhanced investment and employment. The subsuming of major central and state taxes in GST, complete and comprehensive set off of input tax on goods and services, and phasing out of central sales tax reduces the cost of locally manufactured goods and services and increases the competitiveness of Indian goods and services in the international market and thus gives boost to investments and Indian exports. With a boost in exports and manufacturing activity, more employment is generated and GDP is increased. Second, simplified tax structure. Under that, first one, ease of doing business. Simpler tax regime with fewer exemptions along with reduction in multiplicity of taxes under GST has led to simplification and uniformity. The uniformity in laws, procedures, and tax rates across the country makes doing business easier. Second, certainty in tax administration. Common system of classification of goods and services ensures certainty in tax administration across India. Third, easy tax compliance. Under that, first, automated procedures with greater use of IT. There are simplified and automated procedures for the various processes such as sorry, registration, returns, refunds, tax payments. All interaction is through the common GSTN portal, therefore, less public interface between the taxpayer and the tax administration. Second, reduction in compliance costs. The compliance cost is lesser under GST as multiple record keeping for a variety of taxes is not needed. Therefore, there is lesser investment of resources and manpower in maintaining records. The uniformity in laws, procedures, and tax rates across the country goes a long way in reducing the compliance cost. The fourth one is advantages for the trade and industry. GST has given more relief to industry, trade, and agriculture through a more comprehensive and wider coverage of input tax set-off and service tax set-off, subsuming of several central and state taxes in the GST and phasing out of CST. The transparent and complete chain of set-offs, which results in widening of tax base and better tax compliance, also leads to lowering of tax burden on an average dealer in industry, trade, and agriculture. Second, mitigation of ill effects of cascading. By subsuming most of the central and state taxes into a single tax and by allowing a set off of prior stage taxes for the transactions across the entire value chain, it helps in mitigating the ill effects of cascading, improving competitiveness, and improving liquidity of the business. Third, benefits to small traders and entrepreneurs. GST has increased the threshold for GST registration for small businesses. Further, single registration is needed in one state. Small businesses have also been provided the additional benefit of composition scheme. With the creation of a seamless national market across the country, small enterprises have an opportunity to expand their national footprint with minimal investment. Thank you.